Good day, Divergence Traders. How are we all doing today? It's 11:02 a.m. It's November 7th, which, God, which used to be my mom's birthday. Oh, I still miss my mama. Anyway, yeah, I'm a big old mama's boy. Anyway, let's check this out here. We got to see the setups here. Check them out. Check them out. Right here was the opening candle, opening of the stock market right here. Okay, the big red candle down. Why would, if they have the intentions of taking it all the way up, up here like they did, why would they first sell it down? Why would they buy it up and then sell it down? Because they want to screw you, man. Right up your nose with a rubber hose. Water turned on full pin. That's why. You know it. Trading is tricky. If you get in the trade and you start seeing losses, you start panicking, you get out of your trade, it makes you do all kinds of crazy things. Yeah, that's trading for you. Not that I did that today or anything. No. Okay. So anyway, let's look for some divergence. Okay? Which was right here. All right, we got that nice flashy red line there, huh? Yes. Anyway, it's from one of those. Let's see, which one is it? Yeah, it's the first one. Doesn't matter. It's from there to there. It's divergent. So where would have we entered? Long. Right here. Okay. So you could have got in right at the top of this signal candle. This is the signal candle. Okay, the qualifier. Or you could have waited for a little bit of a retrace. So once it closed here, the second candle, you would have bought it. And up it goes. So if we bought it here, our stop is always at the closest swing low in a buy trade or the closest swing high in a sell trade. Okay, so the stop would have been 35 points, let's say. Did we get those 35 points quick? Oh yeah, right there. Right there. Now, let's show the next beautiful trade right there. Lower close, buy it, and up it goes. See that, baby? Lower close, a nice big one. So many people are selling right here when the market's going up like this. Okay? It's crazy. Anyway. So you would have got long right there. Went up 113 points from there. Two beautiful trades with pullback candles that I call lower close, up it goes, lower close, up it goes. Okay. Things were good on the NASDAQ today. Let's take a look at the S&P 500 now. Probably the same kind of trades almost. Well, no, a little bit different. You can see the red line there where I drew that red line. That was against the trend. It would have lined up right there and right there. It would have been divergent if it would have went down, but it didn't because they wanted to take it up. So we had scratched that trade out and we'd pull on, well, sorry. We'd grab that damn line and we'd put it over here. Okay. Oh, yeah. Problems talking. Fun. Life is fun. Oh, yeah. Okay. So we would have got long right on the opening candle. Okay. Right there. Boom. And the stop was exactly 8 points. Did we get our 8 points here? No, we got 7. 7 is still good. Then what did we have here? We had another lower close and up it goes. Okay, right there. So right on the opening or the close of this big red candle here, you would have bought it. to the top, it was 19 points. Okay? Okay. Let's now take a look. There's no trade here to buy, ladies and gentlemen, just in case if you're wondering, because this valley is deeper than this one. Okay, let's move on here to the US 30, known as the Dow. Gave us the same trade, basically, ladies and gents. When was this at? Oh, 10 minutes before the open. Then the open did some, you know, some shaking and rattling and rolling right in there. Shake the people out, man. Shake them out. Yeah. The banksters. Let's shake them out, man. Shake, rattle, and roll. Right there. And right there like that. Look at that. Beautiful, beautiful. Buy long right there. Your stop would have been right there. Your stop would have been 35 points. And it went up 37, almost 38 points right there. And then it did its little, you know, doo-dah. This is the opening, I think, right here. Yeah, see how I can always tell? There's a wick on each fucking end of it. It's a baton. Baton, you know those girls, the baton, they're flipping it and they're jumping and dancing and at the football game with the baton. Yeah, I'm sure you know what a baton is. I'm saying it kind of like in French because I am 50% French. What can I say? Canadian French. Okay, so we got that there, and then what did we get? Well, we got a lower close on this candle, but guess what? It closed below the moving averages, so that is a no trade. Okay, and then the next one closed just on the borderline of it. So you could have taken that one. So you'd buy the dip, sell the rip, right? That's it. Buy the dip, sell the rip. So you would have bought right on the opening of that candle right there, man. Woohoo! And up we go. Yeah, 140 points. Okay? So I told you the other day that I'm going to use the arrows for the divergence setup, okay? But the lower close, buy it up it goes, or higher close and down she goes, okay? Those are going to be the thumbs up emblems that I put on the chart so you can recognize it. And it's all part of what I will be sharing with you soon enough. Okay, let's see. We have a whole bunch of wicks here. I wouldn't buy a dip there. Okay, let's go to the pound dollar and then the euro. All right. Okay. The good trades were in the UK session. Okay, let me show you. We had a trade here to sell. Just like that, see? And it's going down just like that. Right there to right here. Doesn't have to be perfect, you know, from the very low top of the wick to the very high top of the wick. It doesn't have to be perfect. I'm sure you know that by now. Okay. Arrow down, you would have sold it right there, exactly on the opening of that candle at exactly 4:05 a.m. You would have sold it right there. All trades are executed on the close of the candles. Do you know why? It's not how it opens. It's how it closes to determine the near-term trend. That comes from my, I think it was, yeah, first mentor. His name is Tim Hannigan. May he rest in peace. He was the best grain analyst in the world, this guy. He would tell you six months ahead of time, hey, this is going to happen. And he knew by the numbers of the inventory of grain storage. Okay, and of course, in the key yield development time, he also, went by weather forecasts, of course, because the more rain you get, the more grain you get. No rain, less grain, right? So that was my saying. But anyway, I used to trade the grains back in 2002, 3, and 4. Okay, so anyway, he's the one that taught me that saying. It's not how it opens, it's how it closes. So that's why I always get in my setups on the close of the candle, okay? Which is right there. That's the close. Everything's lining up. It's closed below the 5 and the 7. It's closing near the low or at the low of that candle. There's divergence here. You got to put all these reasons together. When you do a trade, you got to have a reason. You got to have a reason, man. You can't just go, flip a quarter. I don't have a quarter here to flip and make the cha-ching sound. You can't flip a fucking quarter or a coin. It ain't going to work for you, man. You got to have a strategy. You got to have an entry. The reason for the entry, It's not just the moving average crossing down below the 7 that's saying, oh, sell, Jason, sell now. No, it's because there was divergence above it. This is the key factor, okay? And you could be going by a MACD or a stochastic, oversold, overbought, whatever. You got to have a strategy. You got to have a reason to get in that trade. Otherwise, you're gonna lose. You know what I'm talking about. Okay, so anyway, shut up, Jason, and move on. So we would have sold it right there in the opening of this candle. The stop is always at the closest swing, near swing high, right there. So it was like 9 pip stop. You could have put it up here for safety, 14 pips, right? So there's 15 pips right there. Within 20 minutes, you got your profit. If you held on for 2 to 1, there it is, 28 pips. Well, what did I say? The stop is going to be 10 or 14. I don't know. I can't remember now. It went down. Okay. Yeah, you got 2 to 1 or almost. Then we had another trade. Let's check it out, ladies and gentlemen. Actually, I missed the little scalp trades, but I'll show you them. I'll spend some time here. Damn right. All right. Right on the opening of that candle right there at exactly 12:40, which is 5:40 a.m. Eastern Standard Time. You would have got short right there. The stop would be right there, 10 pips. How much did it go down? 28 pips, ladies and gentlemen. Isn't that beautiful? And look at all the nice trades along the way. See, this was a trip down the mountain. And on our way down, we had to stop and go, oh, look. We're going down the mountain. And what do we find? We find a sell trade. And then we keep going and we find another one, just like the other one, right there. So if you would have took the profit, some pips there, how much did it go down? It went down 5 pips. Scalpers, okay, these are scalp trades, okay, these thumbs. Now, scalpers go anywhere from 5 to 10 pips for a trade. It's not like, oh, it's going to go down 100, it's going to go, I know it's going to go. No, okay? So anyway, there's 2 scalp trades, the 2 thumbs, and then there's one over here. Did I measure that out yet? Yeah, 10 and, yeah, 28. I measured it. I'm sorry, I'm a little bit forgetful. Please mind me now. Okay, right here. Higher close, sell it, down it goes. Okay, here's another one right there. We'll put one more on there for the kipper. You gotta serve the kipper. Okay, right there, sell it. Boom. It went down 15 pips. This is the pound dollar, ladies and gentlemen. It's the Forex currency market we're looking at. Okay, so what did we have in here? To a lot of people, that would be a mess. That would be hell. Hell. Hell or high water. Okay, but for me, it's just some topping action. And we go like that, and we got in there. Right on the opening of that candle. So your stop would be right in here somewhere, 9 pips, or let's see, what is it to the top? 13. Did we get 13 here? No, but if you stuck with it, did we get 13 down to here? No, we got 10. So, you know, that's what you got. Can't always get what, you know, it's funny how some people will put a target on the chart and it won't go there. And it has every right not to go there. It's you that thinks it's going to go there. It doesn't mean it's going to go there. And like the market gods aren't going to stop and say, oh, you better go 3 more ticks to hit my take profit. The market doesn't know where your stop loss is or where your take profit is. Do you see what I'm getting at? Yeah. You got to make the decision. Okay, we're like a couple of pips away. It doesn't look like it's going to keep going. And you know, and you might want to like move your stop to break even at least. But you do that and sometimes it'll come back and snap you. You know? That's what happens. Now right here we have a low and a retracement and a lower low, but we don't have the setup here because this side of where we need to draw the line from, it needs to be lower than this side, and it's not. So there's no trade to buy here other than price strongly racing up and closing up above the 2 moving averages. So if you wanted to get in this trade right here, okay, your stop would be 14. Look at that, it missed it by like a half a pip. See right there, if you would have jumped in after this big bullish candle right here, and you know, and if you would have put your stop and take profit on, and it's coming like 1 pip from your damn take profit, close the trade, take the profit. Don't let it go back down here and give you nothing, give you 2 pips or 1 pip. Take it. If you don't take it, the market will. That's another saying I learned from Tim Hannigan, the grain analyst. Yeah, he taught me a few sayings. I used to say to him, "Oh, if I only would have held on, you know, just a little longer." He goes, "Woulda, coulda, shoulda." That's what he'd say to me, the bastard. Anyway, all these sayings he knew was so good, you know. One of my favorite sayings, I have to say it, okay, it is, trade what you see, not what you think. Okay? So what do you see on the chart? What is it telling you? What's the story it's telling you? Oh, look at this right here. Look. Right as I'm speaking, look at this. Double top. Divergence. Look at that. There's a setup right there, ladies and gentlemen. So let me tell you, if you were getting in, our stop would be 12, 13 pips. Only went down 8 so far, but it has to go down about 13 down here. But that's a setup right there before your eyes as I'm doing the video. Okay, that's pound dollar. Let's look at the euro now. Oh, what do we have here? Yeah, we have the same trade. Remember that same trade? Yeah, I'm just gonna draw the ones down here, okay? But there was trades there, believe me. There was a sell right there. Okay, so anyway, we have a high and a higher high. We're just going to do the trades in the US session here, okay? All right. Right there like that. We would have got short. Right there. Say we got in at a better price right there. Our stop would be 9 pips on the Euro USD. And there's 13 pips. So we would have got our 1-to-1 win-loss ratio. Now, let's see. This one is a little tricky. Let's see. Oh, yeah, it's divergent. No problemo. Right there. Okay. See? Right there it lines up. Right there it lines up. You would have got long after this nice bullish candle. Let's just say we got in at the lower close and buy it and up it goes. Entry point. I'll put that on there. 10 pip stop, 11 pip stop. Went up 18 pips. Okay, and then we also had a lower close and up it goes right there. Okay, lower close, buy it, up it goes. Here's another one. Right here. Okay. Here, see, there's not one here because it closed below our moving averages. And usually when it closes below my moving averages, sometimes it keeps going. That's why I would not buy the dip, because then it would keep going down and I'd lose. It's like trying to catch a freaking, a falling knife that's gonna, with razor sharp edge, that's gonna cut your fingers right off. Zing! Yes, yes indeed. You don't want to do that. Okay, so we got 1, we got 2. Yeah, I wouldn't do this third one even though it worked. Okay? Okay, that's the trades there. Pound yen. Low and lower low. Lots of divergence today, like always, huh? Isn't it crazy? I think it is. I struggled so long, man. I'm telling you, so long. I never put it together until I came across divergence. Stop is 20 points. There's the 20 points. And then we had a lower close, buy it, and up it goes. There's your 10 pips. Here's another one, and another one, and another one. There's a whole bunch of them. I gotta love it. Gotta love it. There's a buy right there. Scalp trade. And right here, another buy. Lower close and buy it, and up it flipping goes. Yeah, baby. Yeah. Euro yen. Pound, that was the pound yen? Oh, I'm trying to leave before I'm not done yet. Okay, come on, Jason. I don't even need to put a line here. We got the pivot, the main pivot of the day right there. Oh. Okay. Would have sold it right on the opening of this candle right here, this cross. Okay. Stop is always the closest swing high in a sell or low in a buy. Swing high, swing low, that's where you put the stop. Okay, so it's a 12-point stop. We missed it by like half a point here yet. Maybe it'll come down and push lower. But for now, this is what it's doing. Okay. We're almost done. Euro yen, then we got gold and okay. So right here, we're looking at the EJ. There definitely was a trade up here, ladies and gentlemen. I want to show it to you. It is hidden, hard to see divergence. Okay. would have got short right there, stop right there, 10-point stop. Went down 15 to there. And then we had a higher close, sell it, and down it goes. And then we had a, here we do it on the chart first, low and lower low. Okay. Put a bot right there. Went up 31 pips, man. Definitely hit your 1-to-1. It would have hit your 3-to-1. Okay? Then, what if we really wanted to do this trade? I don't know. At the time, I would have to see. Like, let me put a line on here. Hold on. Right there. I bet you. What is it telling us on the 15? It would have told you at that time. See right here? See how the 5 is above the 7 on the 15-minute time frame? Look above, see the 15 minutes? Okay, so there would be no sell trade here because you're selling against the trend. And the trend was up. Okay? So to do that carefully, you would not sell here. Okay? Instead, you'd be waiting for the cross up and yes. Clicking the wrong thing, sorry. Right here. You're looking for, there's a pullback. Right there. You're waiting for the hard to see hidden divergence. That's what you're waiting for. Right there, somewhere there. Which would have gave you the signal to buy on the opening candle right there. Buy right there. Your stop would have been 10 pips, 11 pips. Went up 20. Excuse me. There you have it. See how important it is to not get suckered in these sell trades in an uptrend or buy trades in a downtrend? Yeah, you look at the time frame above and you go, hey, what's going on here? Because there was divergence here, ladies and gentlemen. Do you see it? High and higher highs, right? And a low on this sucker, see? So there was a sell trade here. Let's see, would have it even worked? Our stop was 9. If you would have done it anyway, you would have hit your 1-to-1 win-loss ratio target anyway. So that's nice. Gotta like that. Oh, you gotta love days like this where I love these like all red candles, all blue candles. I love those kind of moves. They look so nice. It looks like Christmas on the chart. Merry Christmas. Yeah, all the colors, all the reds and the blues and the golds. Yeah. Okay, let's take a look at gold. Now, this is the trade I did today, was gold. Let me show you the divergence with gold. Right from here. Low and lower low. Right there like that. We got long right there. Stop is 31 ticks, and it went up 74. You would have got your 2-to-1 win-loss ratio. Now, anyway, I did this trade right here today. Okay? It was a sell trade. I got in somewhere right in here somewhere, and I got out right there. 40 ticks, 40 points, whatever you want to call it. And I got out. I could see it hesitating here. I was hoping it was going to just make one more smackdown, you know, somewhere between here and here, right? But did it do that? No, it started going back up. I said, "Fook this," and I closed the trade, took my profit, and that was the end of that. But anyway, that's the trade in gold, the 2 trades in gold today right there, a buy and a sell. Both were successful. And let's just take a look at the last instrument now, which is oil. Okay. There's nice trades in oil as well. Let me show you. We got a high and a higher high. Come on, you're supposed to stick to the top of that wick. All right. See that? Yeah, isn't that beautiful? But it got short right there. Went down 57 ticks, and your stop was 31 ticks. Then, what did we have? Oh, we got more setups. We have hard to see divergence. We're just going to put it on the body of that candle so you can see it and it's not mixed up with the other trade. Okay? And we got an arrow to go right there. Oh, hold on. Got to finish drawing the divergence. Okay, right there like that. Yeah, it's a little off, but it's divergent. Trust me, I used to be a used car salesman. I used to sell Fords. Ford's best car in the 70s you could ever drive is a Ford. No, I'm just kidding. The Ford F-150 trucks, they're good. Not that I like trucks. I don't like trucks. I like cars. But anyway, okay. So we would have got short there. Our stop would have been 24 points. You got that 24 points in like 5 minutes, man, trading oil. Because they just sank it down like 41 ticks. So then what happened? Well, then we had a higher close, even though it wasn't very big. I wish it was higher up here, but the first one, like right after the main trade setup, which is right here, it's usually very good. It usually works like really high percentage-wise. Okay? Oh, I said all those words and I ran out of air. Okay. Yes, right here. Right on the opening of this candle, you would sell it, and in 10 minutes, it went down 48 points. Gotta like that. So that's the first one. Here's the second one right here. Right there. Higher close, sell it, down it goes. And here's another one. Higher close, sell it, down it goes. But see if you did one over here, it wouldn't have worked out. That's why I only do the first two. Try and, I know you'll be tempted. You'll see another one. Doesn't mean it's going to work. It could. There's a possibility, like maybe 50% chance. But this one up here, it's like a 95% chance it's going to work out. Okay? Okay, so there's that one. There's that one. There's the arrows. What's the next setup? Oh, it's right here. Remember I told you about the candles, how they buy fake people into it, and how the candle will close up above the two moving averages, and then they'll smack the fucker down? Remember I told you that setup? Well, here it is. It's right here. Let me get that arrow. See what it sold right there on the opening of that. Stop was like 16 ticks. Went down 47 ticks. See this one right here? I wouldn't even mess with selling down here. Look, not because I can see that it's gone like this. It's like, holy geez, man, like you got to give up on your selling sometime. Because we went down from the top to the bottom like 150 freaking points. So, you know, I wouldn't be doing that one. But I would have done this one right here, sell, and, you know, and somewhere take the profits in here. And that's it. Okay, so that is it. That is all for today, ladies and gentlemen. I want to thank you for coming out today and watching and listening. And I would really appreciate it if you could be so kind, you know, to hit the like button. YouTube likes when people tap the like button. They like that. I like it too. And if you haven't subscribed, please subscribe. Okay, it's free to do so. So have a really good rest of your afternoon. It's now 11:37, And good luck and good trading.